Good morning, friends. Today, our class number 28 and accounting. I have completed, I should not say I, but we have completed a greater part of accounting, starting with the concept of accounting, meaning and definition, then journal, ledger, trial balance, and after that we have completed final accounts, the trading account, profit and loss account, and balance sheet. And after that, on completion of that, we took up subdivisions of journal. In subdivisions of journal, the most important one is cash book, and that we have done completed. A single column cash book, double column cash book, and triple column cash book. So these are the very important documents which are prepared by any organization. Any organization, be it whatever is the nature of the organization, that must be prepared. Now today, this is in this class, class number 28, I am taking up accounting aspects of non-trading concern. Now, what is non-trading concern? You think it. And anyone, be it an individual, be it any organization, whatever be the nature of entity, small organization, big organization, company form, partnership form, cooperative society, trust, or whatever it may be, each and every one who are concerned with some activities to get their objective fulfilled, they must have to meet their expenses and they must have their sources of revenue. Okay? So there must be some earning, there must be some outflows. That is payments. And so whenever you are making the payments in terms of money, that means you are making different type of transactions. And whenever you are meeting the different type of transactions, for whatever, even a single transactions, it must be properly recorded. In your house, as an individual, whenever you are buying the materials from the market, you are shopping, you are buying groceries, you are buying clothes, you are buying any veg or non-veg item, whatever it may be, all are duly recorded in your pages. The most in your house you maintain a rough form. No? In a page you write down all these things. Okay, but it is possible for a particular individual. But when in the context of an organization, when the nature of transaction is varied and various multiplicity of the nature of transaction, the volume of the transaction, so all these basically demand the proper accounting. Proper account, in the absence of proper accounting, you will get some misleading results. Misleading results, and these misleading results will lead to some misleading decision making, erratic decision making. So first of all, think, whatever be the organization has its own objectives, own targets, own aims, and in order to fulfill your objectives, you have to meet the expenses. Okay, I will go on meeting expenses, no problem. But what is that? With the objectives, targets, and mission in view, you go on meeting expenses. Clear? Now, to what extent and you meet the expenses as per your plans, as per your programs, as per your procedure, as per your schedule. Okay? So you have to take huge number of decisions. You have to take huge decision, and the process of decision making is not complete, is not possible until and unless you do have the information in your hand. I have already told you these informations are of two types. One is quantitative information and the other one is qualitative information. Qualitative information is beyond our purview. Quantitative, those which are expressed in terms of number, is our issue. And out of them, only those issues are very important for the accountants, which are financial in nature. Clear? So whatever be the organization, each and every organization has to maintain the records of all the transactions made. All the transactions made. And whenever some person is asked, how are you? The person says in his words, अच्छे हैं, बुरा है, ये है, वो है. So if you ask an organization, how are you? The organization can't speak, okay? But the organization speaks through accounts. And that is why accounting is regarded as the language of business. Accounting is regarded as the language of business. Better the language, clear is the language, the there will be purity in information, and that will lead to positive decision making, effective decision making. Okay. Now these organizations are of basically two types. What are the organizations? The organizations are of two types. One is trading organization and the other one is non-trading organization. Trading organizations are those which are engaged in earning profits. Trading organizations are those which are engaged in earning profit. Now, these trading organizations are of two types. One is general commercial organization, merchandising organization, those who are involved in purchase and sale of goods and services of goods. And there is another trading organization which is engaged in transformation of goods from one form to the other, that is industrial activity. So there may be some merchandising organization, there may be some industrial organization. So whatever be, these organizations are interested in earning profit. Okay, that is known as trading organization. And non-trading organizations are those organizations which are not directly interested in, which is not primarily motivated to earn profit. Okay, but they are interested in extending services. Okay, and as the topic, consider the examples of club, hospital, okay, library, club, hospital. Although hospital today, the nursing homes are all trading or business houses. Okay, the schools, government schools are not profit organization, they are not trading organization. But the schools, privately motivated schools, basically interested to earn some money, surplus, so they may be treated as a trading organization. But they are usually treated as non-trading organization. The trading organizations are those which are directly involved in merchandising or industrial activities, and non-trading organizations are those who are interested in, who are basically concerned in helping scattering services to others. Okay. And that non-trading organization, but whatever be the nature of organization, each and every organization must maintain a detailed accounting. And the detailed accounting starts from where? From the transaction. Okay? Detailed accounting transactions. And these transactions, from this transaction we record in journal, then ledger, and then balance. Okay? So this is the primary aspects of your accounting. This is the primary aspect of accounting. Each and every organization should maintain this procedure. Okay, and whenever you have prepared the organization, you have got the balances of the different accounts. Okay, you have got the summarized form of all the transactions effected during the year, and with that you prepare what? You prepare the statement of results. Okay, it is the results. So what is the results? Here, each and every organization must be interested to know the results of the total transactions taking place during the particular period concerned. Okay, so everybody will try to know the results. And in case of trading organization, I have told you that in case of trading organization, they prepare trading and profit and loss account. Trading account, gross profit, profit and loss account, the net profit. Clear? And so, but in case of non-trading concern, what we do? The non-trading concern, they prepare income and expenditure account. They prepare income and expenditure account. Okay, and this expenditure account is the profit and loss account of non-trading concern. Clear? And each and every organization must know the affairs, position of their affairs. Affairs means our assets, our liabilities. So each and every organization must prepare a statement of affairs. And in case of trading organization, it is regarded as balance sheet. And in case of non-trading organization, it is regarded as statement of affairs, or it may be regarded as balance sheet. Okay, so at the same level. Okay, balance sheet. A forecast position of affairs. For results, they prepare trading and profit and loss account, and non-trading also prepare income and expenditure account. Now, so far as the cash flow is concerned. Cash flow, in case of trading concern, we prepare cash flow, okay? But in case of non-trading concern, we prepare receipts and payments account. But there is some difference between receipts and payments account and cash flow. Although it is not stated in any book, you will just listen to. Whatever be the nature of the organization, each organization must make transaction and as soon as the transactions are made, the accounting process starts. Primary recording, journal, posting, costing, balancing, ledger, and then summarizing trial balance. And we also prepare a separate account, that is cash book. In cash book, we basically maintain 3 columns or 2 columns. Okay? So cash book, each and every organization, be it trading organization, be it non-trading organization, they must prepare the cash book. Clear? After preparation of the cash book, so these are the general records which are prepared by a trading organization and which are also prepared by non-trading organization. And now the total summarized cash book with all the information the non-trading person prepare and receipts and payments account. It looks like cash book. Okay? It exactly looks like cash book. But in general cash book, what we get? We have 2 accounts, maybe 2 columns or 3 columns. Okay? Cash and bank column. But receipts and payments account have only 1 column, and that is cash column. Okay? But you may prepare double column receipts and payments account. That may be also prepared. But there is some complexity. Okay? But generally, I am telling you know that each and every organization starts their accounting as soon as the transactions are effected and journal, ledger, and cash book. So all these are the minimum documents which each and every organization must prepare, must maintain. And for getting the final results, we start with the account balance sheet, and the trading account is prepared, profit and loss is prepared, and the profit and loss. Profit is added to capital, and any drawing that is subtracted, and you get the balance sheet. Okay, so this is the more of the scenario. Now, how does it look like? And first of all, I am going to start receipts and payments account. I am giving you the glimpse of the ideas. Okay, just I am giving you the idea today, and tomorrow I will take up the problems. So friends, it is receipts and payments account. Okay. Receipts and payments account. Okay. Here we record all the receipts. And we record the payments. side. Here. Clear? So friends, this is the more or less the profound. Clear? Receipts and payments account is nothing but the summarized cash statement. Summarized cash book. Okay. In cash book, we basically prepare two accounts, two columns, but here we make a summarized statement. Okay. And as we have done in case of cash book, we have the opening balances are written over here. To balance BF. We should start in that way. Okay. And cash balance and bank balance. Both are stated in one column. Okay. Clear? So this is very, very summarized from now in the credit it is the opening date. Okay? Say 1/1/2019. Say 31st 12/2019. File balance sheet, cash and bank. Okay, so we will get the amount. You may prepare some double column receipts and payments account also if required. It may be double column too. But since it is like cash book, here we record all the flow, inflow and outflow of cash. All the inflow and outflow of the cash. What are the inflows? What are the sources of inflow? The inflow in any, say, consider a club. The first and most important area, the flow sources of income is subscription. Okay, the monthly subscription, annual subscription, whatever it may be, subscription. Subscription. Now there is another source. The clubs basically takes the donation, okay, from the different sources. The donation. Then there may be some live membership fees. Actually, these are the basic sources of income of any non-trading concern. Here, now this is the receipts. You may receive the subscription. This is our year concern is 19, okay, 2019. But you may receive here. You may receive the say you have received the subscription of 25,000. Okay. Now this subscription is your income, just consider it. And this income will come over here by subscription. By subscription received how much? 20,000. How much? 25,000. Now, out of this subscription, you have received the subscription. This subscription amount included 25,000 includes the subscription received. Subscription received of 2018. Now thinking, you have received 25,000, but out of that, Out of that, 3,000 is related to the previous year. So is it the income of this year? Certainly not. So there is some difference between income and receipts. I am coming to that part. Whatever I am doing, so this rupees 3,000 should be deducted, less relating to previous year. Okay, to 3,000. Clear? Again now, so it is how much? 22,000. And this year subscription due but not received. How much? 8,000. Say 8,000. So add outstanding. Outstanding 8,000. So what is the amount of subscription this year? It is the amount of subscription of this year is 30,000. There. Now just I have made this type of treatment. Now listen to what for. Receipts refers to any inflow. Clear? Now the distinction between receipts and income. Receipt is an inflow, income is also an inflow. Any problem? Not at all. You have done it. Wages paid 25,000 this year. So what is the, sorry, I'm considering receipts. Here receipts and payments, here I am considering payments and expenditure. Okay. Receipt is any inflow. It may be capital in nature, it may be revenue in nature. Clear? You have sold some assets. You have sold some assets for rupees 12,000. Okay, some old furniture, some tables and many other. Okay, it will be received how many times? It will be received once only. So it is a capital receipt. Okay, it is capital receipt. But you are receiving subscription. The subscription, capital receipt is that which is received only once. Okay, and capital revenue receipt is that which is repeatedly received. This subscription of a club. It relates to per month. Okay, so you are having the repetition of this income, the repetition of this inflow, and you are getting it this year. You will get that in the coming year and the other years coming. So the receipt is basically anything that comes into the receipt. Clear? And this receipt may be capital in nature, may be revenue in nature. The revenue in nature, the receipts which are revenue in nature is concerned with, is related to income. Clear? So in order to be an income, the amount must be revenue, the collection by items must be revenue in nature. This is number one. And it must relates to the account. Here you have received the subscription. This is the receipt. This is the receipt. But what is the income? The income is 30,000. Why? Just you consider it. This is the difference. That you have received the total subscription this year. So it is the receipt. And it is revenue receipt, but it is not the income. Why not? Because out of that only the receipt which is related to a particular period. In order to income, it must be a revenue receipt, and number one, it must be revenue in nature, and number two, it relates to a particular period concern. Okay, because you are preparing the income statement for the amendment 31/12/2019. So the subscription which relates to that period will be regarded, will come over here, as you have seen in your trading and profit and loss account. Right? You wages paid. Okay, say wages paid 25,000. Now outstanding wages 5,000. So what is the total? 30,000. Now you have made an advance payment of 2,000. So what it is? It is 28,000. Now wages relates to last year 4,000. So it is the reduced figure is 21,000. So 21,000 is the payment, is the expenditure. So here in this way we should try to difference between receipts and income. And what is the similarity? Income is an inflow, receipt is also an input. This receipt may be capital in nature, may be revenue in nature. But income is concerned with the revenue item, only the revenue item, number one. And number two. Number three, the receipts may be of this year, it may relates to previous year, it may relates to the coming year or years, but revenue is concerned with a particular year. Clear? So why I am telling all these things? Because whenever you will be asked to prepare income and expenditure account from receipts and payments account, you have to consider these principles. Okay? Achha. So I have given the idea of receipts and income. So receipts may be capital in nature, receipts may be revenue in nature. The capital receipts must not take place over here. It will go to balance sheet. Okay, it will go to balance sheet. You have sold some machinery, what I have told you. Some machinery of rupees 25,000, machinery of rupees 10,000 has been sold at rupees 5,000. Okay, now what is the amount of machinery reduced? For 10,000, so it will be deducted from in the balance sheet. Okay, 10,000 will be deducted from balance sheet, but you have received 5,000, so there will be a loss of how much? 5,000, and that loss will come over here. And you will get all these things, all these issues cleared while we will be solving the problem. Fine. Now then comes the question of payments and income. What are the basic sources of payments? The basic sources say purchase of alumina. Okay, this is the payment. Clear? And this payment is revenue in nature or capital in nature? Capital in nature. Where it will go? You have purchased an alumina, it is an increment of an asset, it will go to balance sheet, in the asset side of the balance sheet. Clear? Say you have made payment of ground rent. Ground rent. It is capital or revenue? It is ground rent. It should be given every time, every month or every year, revenue in nature, and that item will come over here. Ground rent. Clear? Say you have paid, you have ground rent is 12,000 you have paid. But the ground rent you have paid 12,000. Out of that 2,000 relates to previous year. So less relating to previous year. Okay? 2,000. So you have paid 12,000. Okay? But out of that you have paid for this year is 2,000. Now some ground rent due. Say due ground rent outstanding. Outstanding 5,000. So what is the total amount of ground rent? It is 50,000. Clear? Here it is. Just you think it. What is the difference between payment and expenditure? I have given you some examples, and out of that, payments means any inflow, any outflow. Payments refers to any outflow. Clear? And these payments may be of two types. One is capital and one is revenue. Capital payments basically results in appreciation of assets. So it will go to asset side. Okay, it will go to balance sheet. And payments which is revenue in nature will be treated as an expenditure. So it will come in the expenditure side. Clear? Now consider life membership and depreciation of furniture. There must be some depreciation. Where it will go? The furniture is a loss. Okay, it is a loss. It will come over here with less to this year, and it will reduce the value of the asset. And the asset amount, this asset will be reduced by that amount, and it will be treated to balance it, in balance it. So these are the different types. Say, wages to money. Wages. You have, just rubbing it, okay? So you have paid wages to watchman by wages. Say you have paid wages. What can I say? In this year you have paid 28,000. Yeah. Now, out of this is revenue in nature, so it is an outflow, the 28,000. But out of that, you have given some advance to your watchman. So wages to watchman 28,000. Say less advance 6,000. Okay, so it is 22,000. So it is a payment. It is a payment of 28,000. But this out of that payment 6,000 is not related to this year. It relates to the coming year. So what is the expenses of this year? Okay. Now what is the difference between income and expenditure and payment? Payment is an outflow. Expenditure is an outflow. Payments may be capital and both. It may be capital and in nature, may be revenue in nature. And the income, the expenditures must be revenue in nature. Okay, which is regular, which is recurring. Clear? And it may be, it must concern during a particular period. Clear? So this is the more or less the a short analysis, a short discussion on the nature of receipts, nature of income, payments and expenditure. Okay, so I have given a total idea of this and how they are to be treated. Tomorrow I will take up one problem on receipts. Okay, and from that I will go on preparing income and expenditure account and balance sheet. And after that I will give, there may be some other information given which will help to prepare the receipts and payments account. Okay, so friends, and now I am totally summing up. Okay, what I have to do within 5 minutes. Accounting is regarded as the language of the business. Business refers to any activity. In layman, business refers to being busy in any activity. So whenever you are buying, say whenever you are buying your command, it is for your house, you are also in business. But different business refers to earning of goods and services, earning of surplus. Okay, it may be trading, it may be industrial. There, and there may be so each and every industrial house or trading house concerned must try to learn how much surplus they have generated during a particular period concerned, and so they go on recording their transactions and journal, ledger, trial balance, and cash book also. And thereby they collect a huge number of information, and with the help of information they prepare final account and balance sheet. And consider the cases of non-trading concern. Non-trading concern are those concerns which are not interested to earn money, but they are ready to, their objective is to extend services to the society or to the nation. And these organizations also meet expenses, they also may affect transactions, so they should record, the transactions will be recorded journal, ledger, trial balance and cash book. Okay, but in case of trading account, trading account, this is profit earning organization. Trading account organization is also known as profit earning organization. The profit earning organization prepared their final accounts, profit of trading account, profit and loss account, and the statement of balance sheet. Non-profit earning organization prepare two statements, important statement: a summarized cash statement, that is receipts and payments account, to know the balance of the cash and bank, and income and expenditure account to know the surplus. And with the help of the other information, along with this information, they prepare one statement of effect or balance sheet. Okay, and this is the more or less simile and dissimile of the accounts of the trading and non-trading. Okay, so thank you, friend. Tomorrow I will take up receipts and payments account and income and expenditure account with some numerical problems. Thank you very much. Have a nice day.